Okay, now welcome to question number 28. This question was asked in, not this one. Anyway, just come to 28 number taken from study material. XYZ Limited is planning to introduce a new product. Question 28. In your study material, question number 28. Our study material, question number 28. And this question source is study material of the institute. Planning to introduce a new product with the life of 8 years. Underline life of 8 years. Initial equipment cost will be 3.5 crores. Very good question. Additional equipment costing rupees 25 lakh will be purchased at the end of third year. Underline. So this time you will have to purchase two equipments, one at the beginning and one at the end of third year from the cash inflow of the year. At the end of year 8, the original equipment have zero resale value. So original equipment zero salvage value, but additional equipment can be sold for 2,50,000 salvage value. And tell me what will be the life of original equipment? 8 years. What will be the life of additional equipment for depreciation calculation? 8 minus 3, 5 years, because it was purchased at the end of third year, but both will be serving 8 years. So therefore, for depreciation calculation, this is important point. There are two assets we are using in the business. One will have 8-year life, one will have 5-year life. A working capital of 40 lakh will be needed and it will be released at the end of 8th year. So working capital year 0 you will take 40 lakh and you will recover it in the 8th year, entire 40 lakh. Working capital is not depreciated. Okay. The project will be financed with sufficient amount of equity capital. Sales volume of 8 years have been estimated as follows. So this time you have to do some extra calculation. Sale is given in quantity. Sale is given in quantity year wise 1, 2, 3, 4, 5, 6, 7, 8. 4 and 5 will be 2,70,000. 6 and 8 will be 1,80,000. A selling price of 240 per unit is expected and variable cost is amounting to 60% of the sales revenue. So what is my contribution per unit? Contribution per unit, anybody? 240 is the selling price and variable cost is 60% of sale revenue. So contribution would be 96 per unit. Do you agree? Yes. Fixed cost will be 36 lakh per year. Underline one new adjustment. The loss of any year will be set off from profit of subsequent 2 years. Which means suppose there is a loss in any year, it can be carried forward for how many years in this problem? Only 2 years. So within 2 years you have to set off the loss of that year, otherwise that loss will lapse. Tax rate is 30% and 12% is the after tax cost of capital, means discount rate 12%. The company follows straight line method of depreciation, very easy. Compute NPV and advise the management to take appropriate action, decision. So in this question, one task will be to find out CFAT of each year and then we have to find out the NPV. Then we have to find out the NPV. Is it right? So what we'll do, we'll first prepare some small working notes to reach our answer. Students will write step 1 on the screen below. Contribution per unit. Contribution per unit. Student will write contribution per unit. Please write contribution per unit. Have you noted contribution per unit? 240 minus 60%. 240 minus 60%. Write important question. Such questions are asked in the exam for 8 to 10 marks. This one was not asked in the exam. Some other question. That will take 96 rupees per unit. Done. Step 2. Depreciation. Depreciation. Under depreciation, write down A on original equipment. On original equipment. So on original equipment, depreciation will be what is the cost? 3.5 crore. So we will say 350 lakhs minus 0 salvage value and divide by 8 years. Divide by 8 years. So can you please 43.75 lakhs. We'll solve the question in lakhs, okay? Then write down on additional equipment. Now here the student can make a mistake. He may take 8 years, but it was purchased after 3 years. So how can it be 8 years? So here the cost of the additional equipment is 25 lakh and it will have a salvage value of 2.5 lakh minus 2.5. We have to follow straight line method of depreciation and divide by 5 years. 3 years are over. So that is 4.5 lakhs. Is right, 4.5 lakhs. Now we'll prepare the main working note. Calculation of CFAT. Step 3. This is important. Here we will see tax adjustment also, depreciation adjustment also. So highly important question. First column write year. Then you write down sales in units. Then write down total contribution at the rate of rupees 96 per unit. Then you write cash fixed cost. Cash fixed cost we have to deduct. Then you have to write depreciation. Depreciation. So total contribution minus cash fixed cost minus depreciation will give you PBT. Yes or no? And then you pay tax. What is the tax rate in this question? 30%. So tax 30%. And then we'll calculate CFAT. Little lengthy table. Column number also I will write for your future reference. Column number, if there are many columns, better to write column number. 1, 2, 3, 4, 5, 6 equal to 3 minus 4 minus 5. Agreed? 7 and 8 will be equal to column number 3 is contribution, which is inflow. Column number 3 contribution, you will get inflow. Column number 4 is cash fixed cost, outflow. Column number 5 is depreciation. Column number 6 is PBT. Don't take 6 and 5 and 6. Column number 7 is tax outflow. So you will get CFAT. So inflow minus, this is inflow column, this is outflow column, and this is outflow column. Or you can write, if you are interested, 6 minus 7 plus 5. 6 minus 7 plus 5. If you are happy with that, you can write that also. Whatever helps you to understand better. Now we are back to calculation now. Please write down. Now follow year 1, year 2, year 3, 4 dash 5, 6 dash 8. Because we are following straight line, depreciation will also be constant for those years. Agreed? Yes. Sales quantity, please copy from the question book. Please practice this question independently yourself. Any other presentation is also okay as long as you are getting same answer which should be understood by the institute. Sometimes you understand your answer only. Others can't understand. Then there is a problem. Now you write here rupees in lakhs. So you will save time. If you want to write all digits, you are most welcome. So you will multiply 72,000 into 96.
69 lakh 12,000.
69.12. 69.12. Huh.
1 crore 3 lakh.
No, you answer in lakhs. Answer in rupees in lakhs. Please, I reply. I ask you to answer.
103.68.
Haji, 103.68. Don't confuse others. Next one.
249.6. 249.6.
249.60. It will save time, na?
2.7. 259.2.
259.20. Okay, wonderful. Next, come on.
172.8.
172.8. Everybody. Read the problem and you will reply now. What is your cash fixed cost?
214.
What is your cash operating fixed cost? 36 lakh. Write down 36 lakh. Very good. Wonderful. 36 lakh. Okay, wait. Depreciation we have already calculated above. First, second and third year, it will be only original equipment. It will only be first, second and third year 43.75. Wait. But then from 4th year till 8th year, you have to add 4.5 also. So you can, what you can do, you can just add here. You will get the total 48.25 if you have space. Or if you have space here in the table, you can do that. I will request you to keep one line blank after each year in the tables. Okay. So sometimes it is easy to write some working 43.75 plus 4.5. Otherwise, later when you revise, you wonder how this 48.25 has come. Last minute revision, you get tensed. Oh. Now the student will have to use mathematics. Contribution minus cash fixed cost minus depreciation. You may get negative figure, don't worry. First year can be negative also.
Minus 10.63.
10.63 negative. Wonderful. Okay, next below that. Now you'll get some positive answer.
23.93.
23.93. Come on, next one.
Sir, 169.85.
169.85. Wonderful. Next one. This is a time consuming question. With practice, you can do it faster.
Sir, 174.45.
174.95. Anyone? 174.95. Just one more.
88.55.
88.55. Now just wait. This time you have to learn something new. There is a loss in the first year. Highlight. Now if you read the problem, I'll just go to the previous problem, go to this problem, and it says the loss of any one year will be set off from the profit of two subsequent years. So in income tax, they allow you to carry forward the loss and adjust against future taxable income. Correct? So in this case, I have a loss here to 10.63. So first year tax liability will be nil because there is loss. But what about the next year? You first type on your calculator 23.93 minus the carry forward or brought forward a loss and then into tax rate. What is tax rate for this question? Is it 30%? So anybody who wants to
3.99.
3.99. Okay, so put an asterisk mark here. Asterisk mark. And you put an asterisk mark here also. 3.99. So that you can check the asterisk mark below later. And now you just simply take 30% of 169.85.
50.955.
50.955. Wonderful. Next.
52.485.
52.485. One last.
26.565.
26.565. You are right. And show the asterisk mark calculation below if you want to write. Or you can just give the heading tax of year 2 equal to second year tax liability, you can write. Every working note must be presented. Not only for you but for the examiner also. Noted? And don't make mistake in basic calculation. Institute will not worry about what happens to you. They will worry about their own bank balance, their own CFAT, okay?
Yes.
So the moment you give them a chance to earn again from you, you'll grasp the opportunity. Sometimes you are also right, okay? Now column number 8 is 3 minus 4 minus 7. So dear student, take 3, type 3 minus column 4. 7 in the first year is 0. So just take 3 minus 4.
691.
33 point. Very good. 33.12 positive. Who said minus?
3.21.
12. If it is 1-2 here, it will be 1-2 here also, dear. Why are you wasting time of the entire class? You have right to ask query, but not like this. Next one.
63.69.
63.69. Very good. Come on, next one.
Sir, 162.645.
162.645. Okay, come on, next one. Student will have to reply, then only I will write. 170.715. Very good. 3 digits are enough. Next one.
110.235.
110.235. You are right. Amazing.
110.235.
Any query now? Now we are ready to launch the main answer, NPV calculation. Okay. Any query up to this? So we are following the instruction given in the question that loss will be carried forward and set off in next 2 years. How many steps we have written? 4 or 5? 3 we have already written. Now write down step 4. Calculation of NPV. Calculation of NPV. So write down format year, particulars, cash flow, right here rupees in lakhs at the top. Then write down present value factor at the rate 12%. It is given, so I am taking. Respect the institute, okay? And the last column, present value. You will respect them, they will respect you. Second sentence you can fill yourself, okay? So my question is now, have you drawn the format? Then I can start writing and you can ask query related to this question. First, to identify in year 0, what are the cash flows? There are 2 cash flows in year 0. One is cost of original equipment. Yes or no? So particular column will tell you what is that cash flow. So 350 writing in rupees in lakhs, and the factor for this is 1. Year 0, there is a working capital also. You have to invest in working capital, that is given to you is 40 lakh. Read the problem, you will find it. Present value factor is 1. Later on you can multiply and take total. Year 1, write down CF80. CF80 of year 1, where will you get it? In bracket write step 3. I'll just take you to the step 3 and show you. You have to copy these numbers, okay? Whenever I will ask you, last column 33.12 positive, and the first year factor is 0.893. Wait a minute. Year 2, write down CF80. Go to previous table.
Sir,
Can you answer how much was that?
63.69.
63.69.
0.797.
And what is the factor? 0.797. Year 3 again CF80. Can you please reply?
162.645.
162.645. Third year factor in the question book.
712.
Okay, wait. Third year there is one more cash flow. Additional equipment. Oh,
Oh my God.
some students forgot this.
No.
This is how much is given in the problem?
25 lakh.
25 lakh. Factor will be same 0.712. This you write in bracket. There is an outflow. Then you write 4-5. 4-5 CF80. What was that? 4-5 CF80 was how much?
170.745.
715.
715?
Yes, 170.715. Now what you do? On your calculator you add, please add 0.636 plus 0.567
0.636
plus 0.567.
the 1.203.
1.0
1.203
203.
and
1.203. Okay, wait a minute.
628.
Then write down 6-8 CF80. And what was the cash flow of that 110 point?
Sir, it is 1110.235.
235.
0.2.
And please take your calculator,
363.
add 1 point.
363.
Factor you have added 6, 7 and 8. Wait, answer is not over. 8th year, there are 2 more inflows. One is salvage value of additional equipment. Do you remember salvage value of additional equipment is there in the problem? 2.5 lakh. So 2.50 positive. 8th year factor in the question 0.404. Can you see that factor table given? And 8th year, one more thing, write down. Recovery of working capital. Working capital will be recovered in the last year. It's not depreciated. Assume it is 100% recovery. So that is 40 lakh and that is 0.404 again. Now you have to multiply and calculate NPV. Do it as homework. Do it as homework. All figures I have given. So what the students will do, they will just multiply and add it. Your answer should be very close to 161.11 positive. Only multiplication is your homework. And right below advice. Right below advice. Because you have to answer what is the appropriate decision management has to take. So advice, write down. The project should be undertaken. The project should be undertaken. The project should be undertaken because the NPV is positive. Because the NPV is positive. Because the NPV is positive. And then in the exam you will also say positive NPV increases the wealth of the shareholder. Positive NPV increases the wealth of the shareholder. Now come to question number 53. Question number 53, November 22 exam for 10 marks. This question also is based on NPV comparison of two options.
53?
Yes. Question number 53. I'll read the problem. One of the very interesting questions, and many students asked me after the exam that it was a very difficult question and we have not done it. A firm is in the need of a small vehicle to make deliveries. It is intending to choose between two options. One option is to buy a three-wheeler. One option is to buy three-wheeler that would cost rupees 1,50,000 and will remain in service for
10 years.
10 years. So year 0 cost is 1,50,000, life 10 year. The other alternative is to buy a second hand vehicle for rupees 80,000 that would remain in service for 5 years. So they are not equal, but what they have done, they have said thereafter the firm can buy another second hand vehicle for rupees 60,000 that will last for another 5 years. So now they are comparable.
But
So one is 10 year, other is 5 plus 5. So first 5 year you will use the vehicle which will cost 80,000. Another 5 year you will use the vehicle which will cost you 60,000. So both option gives you chance to use the vehicle for 10 years. So now only you have to compare their NPVs. Follow the instruction given in the exam. Do not apply your own intelligence. The scrap value will be equal to its WDV. Underline, this is another new adjustment. Scrap value will be equal to its WDV, which means whatever is the WDV after the life is over will be the salvage value, which means the student will have to find out for the first option salvage value at the end of 10th year, and in this case salvage value of first second hand vehicle at the end of 5th year and second hand vehicle at the end of 10th year. Oh, so there will be two salvage value in the second option. Understood? The firm pays 30% tax and is allowed to claim depreciation on vehicle at 25% on WDV basis. The cost of the capital of the firm is 12%. You are required to advise the best option.
So if that 60,000, that second hand vehicle was not given, then 80,000.
If 60,000 was not given, then it will become a problem of equivalent annualized cost.
Then repeat.
Then we will repeat the first second hand vehicle one more time, but because it is given we have to take two times. Okay, now this question does not have any source of sales or income. Can you see that? So the objective will be to minimize
The cost.
the present value of cash outflow, because it has only outflow, and in future you have benefit in the form of tax shield on depreciation and some salvage value.
So same question 25.
This does not have revenue model.
Our question 25 in book.
So question number 53, write down. All questions are there in your study material also. You have to just practice all questions. Okay. I will start writing now. We have limited time. Kindly follow me. In this question, there are very few cash flows. One is year 0 investment. Then for 10 years, you will get tax shield on depreciation. And in the 10th year, you will get salvage value. These are the three cash flows of the new three-wheeler option 1. Am I right? Because there is no sales. There is no cash fixed cost. So the question is only asking you to compare two options and choose the option which will have lower PV of cash outflow. So we'll solve. It will take some time, but then you can score 10 marks. In one table, we'll solve option 1, new 3-wheeler. Write down new 3-wheeler. First option is to buy new 3-wheeler and directly write down calculation of NPV. Similar question is there in the study material and they just made some changes and asked in the exam. WDV makes the time, makes it a time consuming question, okay. Had it been straight line, it could have been done in just 2 minutes. Then how will the institute earn? They are also having a liquidity issue. Based on asking many students, how was your paper? Most of them said it was very difficult. One student said, sir, I have not calculated depreciation only. How many marks I will get? So will you get marks for writing year 0 cost of the machine only? Year, one column write cost of machine. Then write down depreciation, under depreciation 3 columns. Opening WDV, depreciation at the rate 25%, tax shield at the rate 30%. Then write salvage value in one column. Cash flow column. All we will add whatever are the cash flow related column, and last column present value at the rate 12%. Present value at the rate, what is the rate of discount? 12%?
12%.
Okay, can we start writing?
Sir,
Write column number 1, 2, 3, 4, 5, 6, 7, 8. So first you write down column numbers. Have you written 1, 2, 3, 4, 5, 6, 7, 8?
yes, sir.
In year 0, we are going to incur 1,50,000 in the cost of machine, correct? So my cash flow will also be 1,50,000 only. And my PV would be also 1,50,000. Are you agreeing? Yes. Now I will calculate depreciation. Next 10 year we have to just compute tax shield on depreciation. Okay. Because there is no other cash flow mentioned in the problem. But depreciation tax shield is cash inflow. Yeah. Calculate 1,50,000 into 25%. Lot of calculation involved. 37,500 into 30%. 30% of depreciation is tax shield. Tax shield, yes. What else we can calculate? There is no cash flow in the problem. There is no other cash flow. So the only cash flow is in the problem tax shield on depreciation. 11,250. Salvage value in the last year. So don't worry. 11,250 divide by 1.12 equal to memory plus. Okay, approximately 10,044 you are getting.
10.45.
Write down 10,035 or 45 is okay. Is it 45?
Sir.
Okay, make it 45. 10,045 write down. I have no problem. Then year 2 write down your opening WDV will be. Opening WDV will be, understand, this minus this. 1,12,500 into 25% into 30%.
8438.
Cash flow 8438 divide by 1.12, 2 times equal to
6,726.
yes 6725 write down 6725. No problem. 6725. 1 or 2 rupee plus minus okay. Now you've understood the process, what you have to do for 10 years. Difference between opening and closing WDV, opening and depreciation, you write in the next year as opening WDV. Then you take 25% of that. Then you take 30% of depreciation. 6328 you are getting. Divide by 1.12, 3 times equal to. Approximately 4499 you are getting. If you multiply by the factor given in the problem, you'll get this number.
4, 5.
Is the factor given in the problem? Just check.
Yeah.
So you can multiply by that factor. That is why we are getting a difference of 1 or 2 rupees. Okay, try fourth year. Little fast, please. I am preparing you for a very difficult exam. 63281 into 25%. Use both hand. Left hand for calculation, right hand for writing.
15820.
15820 into 0.3. Yes.
4746.
4746 divided by 1.12, 4 times equal to. And use memory plus function if you are using.
3014.
3014. Multiply by that factor in the problem. 3014. Or you can do yourself also, no problem. Either use the factor or do yourself. Next year opening WDV, come on.
47461.
Into 25%.
Sir, 11865.
Into 30%.
Sir, 355. Sir, 3560.
3560. 3560 into fifth year factor.
3560.
Into fifth year factor.
0.567. Sir, equals to 2019.
2019. 2019. We are solving question number 53. November 2022 exam. Very important. 35596 into 0.25.
Into 0.25. Sir, 8899
into 0.3.
into 0.3. Sir,
2670 into the sixth year factor given in book. 2670
into
2
0.506. Sir, 1351.
1351. Very good. Year 7.
Year 7.
Some patience required and you get 10 marks.
Sir, 26697.
26697 into 0.25.
Into 0.25. Sir,
6674 into 0.3. There is no shortcut.
002.
There is no shortcut. Into seventh year factor from the book.
452. Sir, 905.
905. Now it is matching with my answer. Yes, 20023 into 0.25 into 0.25.
697.
5006 into 0.3 2 into 8th year factor 605. Ninth year opening WDV 15017 into 0.25 3754 into 0.3 into ninth year factor.
3754. 405.
Complete up to this. Now we are in the last year. Don't worry. Last year opening WDV 11263 into 0.25 3816 2816 into 0.3 845 845 into 10th year factor 272, and in the 10th year you will get salvage value also. Now how much salvage value? Understand, salvage value will be The WDV after 10 year. After 10 year WDV will be 11,263 on the screen minus 2816. So you will get this salvage value. So it is a difference between these two numbers. If you want to write in bracket here 11263 minus 2816. That is why I prepared format like this, so that in last year I can explain you the salvage value. What is written about salvage value? Salvage value is equal to WDV after the life of the project. So 10 year is the life. WDV is 8447. 8447 into 10th year factor. Into 10th year factor. Please write down in the notebook. If you think that by reading the answer you will understand this chapter, you are making a grave mistake. Okay. That is the reason why FM subject has such a poor marks in the exam for most of the students. They read capital budgeting answer. Haji, very good. Now the $1 million task is take total of all positive number and then minus 1,50,000. That is the NPV of three-wheeler. New option. Students are requested to give me the NPV of the last column. It will be a negative figure because there is no revenue model here.
Minus 117,430.
Approximately minus 1,70,400 something you are getting. That is okay. 450, 460, 430, 420. 117 is there. 4 is there. Then you enjoy. This is 117, 460. So the present value of the new three-wheeler is 117, 460. So that is your cash outflow in present value terms. Now write down option 2, second-hand vehicle. Haji, second-hand vehicle format is more or less same. Please draw the format. The drawing format is also an art. Okay. Unnecessary columns you have to avoid. At the same time, necessary columns must be presented in a proper sequence. This you will learn with more and more practice. So I am assuming you are ready with the format? No. Okay, one more minute. Write in the notebook. Write in the notebook. When you write, you learn more. When you only watch, you learn less. Okay, ready?
We are done with the format. So
Keep one line blank after each year if you can, so that you can write some calculation, some explanation. So what will happen in this second hand vehicle? You will first buy a second hand vehicle which will cost you 80,000 and you will use it for 5 years. And after 5 years you will purchase another second hand vehicle which will cost you 60,000. So write down year 0, cost of the machine 80,000, cash flow also 80,000, cash flow also 80,000, present value also 80,000 because it is year 0. Then you write down year 1. Now we'll calculate depreciation, tax shield on depreciation. 80,000 into 0.25, 20,000 into 0.3, 6,000. Salvage value will come in the 5th year. So till then, you please just calculate tax shield and present value. 6,000 multiplied by first year factor 0.892 multiply 5352. Then it will match with the institute answer also. Year 2 opening balance 60,000 into 0.25. 15,000 into 0.3 into second year factor given in book 0.797 3587. Okay, no problem. Year 3 opening WDV 45,000 into 0.25 11,250 into 0.3 into third year factor 0.711 multiply 2400 year 4 opening balance. Keep writing. Practice is very important. Okay, mugging up will not help you. Shouting the formula will not help you. You have to involve yourself, okay, in writing the answer. 8438 into 0.3 2531 into fourth year factor 1.365
Sir,
07. Okay, 1607. Now wait. Stop. Fifth year at the this old asset will have a life of 5 years. After 5 years will be over, you will purchase a new machine for 60,000. So 60,000 write down in fifth year. 60,000, understood? But the old machine will be depreciated for fifth year also. So again take the difference here. The 25312 is the difference of these two. Old machine will go up to fifth year. Then into 0.25. Then into 0.3.
1898.
Now stop. In the last year, this old asset will be sold for the difference between 25312 and 6328. So you will get a salvage of the first machine which has a life of 5 years. Yes or no? So student will write here 18984. How did you get it? 25312 minus 6328. Write in bracket if you have space. Okay, now wait. This year, fifth year has 3 cash flows. I will explain. Fifth year has 3 cash flow.
Tax shield.
Add on your calculator. Tax shield you add. Salvage you add.
And minus 60.
And 60,000 will be deducted because it is outflow.
Negative 39118.
So negative 39118. Is it understandable? So you can just circle this 3 number for your future reading. Right. And then you multiply by fifth year factor.
So that is 0.56.
Multiply and give me the answer.
59999.
39118 into fifth year factor. Once again. Into fifth year factor. 22180. If this is confusing, then in the year 5 you write 3 times. One write down tax shield, one write down salvage, one write down new asset. Okay, so that will consume more space. Is it understandable? Similar problem is there in study material also. Year 6 now. Now we'll start depreciating this asset. Now we'll start depreciating this 60,000.
15,000.
Same thing, repeat 5 years. I will not tell you anything, do yourself. Check the last column yourself. 6th year I am getting 2277. Are you also getting?
2277.
7th year, try 7th year. Just few more lines. This is a lengthy problem, but has been asked in the exam. You can't avoid it. If you want to avoid it, your choice. By solving only easy question, you will not get through this difficult exam. 7th saal, 7th year. What is the answer?
1526.
7th year 1526. Very good. 8th year, student will try himself. Now you see there is a repetition. Can you see?
Very
See, this is a repetition here. So you can just copy the same numbers.
1020.
Yes. But the factor is different. So last column don't copy. Okay. Next one, copy the first three columns because the pattern we are getting is same. 1898 into ninth year factor. 683 last year opening WDV. Tell me quickly. 18984,
18984.
then 4746,
4746.
1423.
1424.
No problem. And what will be salvage value in the last year? The difference of these two numbers will come here. Difference between 18984 minus 4746 will be salvage value here. 14238. Have you understood?
Yes.
Or you want me to write?
No, sir.
18984 minus 4746 and take the total of these two numbers. Both are inflows, so that will be the 10th year cash inflow. 15661 into 10th year factor 5043. Now my highly talented students will take the total of this last column. There are two negative figures, remember, and there are remaining positive numbers. So net NPV, keeping in mind negative figures also. Keeping in mind negative figures also. Yes, please reply.
Minus 95623.
There is 122, 180 also in the center. Have you?
78685.
78 something you are getting?
78.
That is okay. 78,000 something is okay. 78,000 some amount is okay. I am sure you can't make mistake in totaling, but it's okay. This combination of two second-hand vehicle will cost you in present value term 78786. That figure was, I think, more than 1 lakh or something. Yes or no?
1,70,400.
Yes. So what companies should do?
Option 2.
This is a good question. This is how companies do their capital budgeting exercise. They actually do such calculation because all figures are already advanced, fixed in advance. You know this is the cost of machine. You know these are the depreciation tax shield you are going to get. Okay. Just write down the advice on the screen. Last line, advice. Option 2 is preferable. Option 2 is preferable because PV of cash outflow is lower. In both options we have outflow, so we have to choose the lower of the two. Now don't say, sir, you have told me NPV is higher, then we should select. That is if it is positive. Then one student will say, in both cases NPV is negative, we should reject. Hello dear, this question does not have revenue model. This question only wants you which machine I should buy so that my cost is minimized. Okay.
Here just the revenue sources.
One more line, write down, note. Yes. Tax shield is not like a revenue model. That is not the intention of buying an asset.
But to minimize my cost.
Yes. As salvage value is equal to WDV, as salvage value is equal to WDV, no capital gain tax will arise. No capital gain tax will arise. No capital gain tax will arise. This way you can present the answer. Any other presentation is welcome as long as we are getting the same answer. So we have solved question on today, NPV, profitability index, discounted payback period, IRR. Now we'll take one question on equivalent annualized cost. When will you use this method? Come on.
When the lifetime is not.
Yes, when you are comparing two or more options with different life, Okay, so then this method is going to generate answer quickly. Question number 25, very important. A, B, C is planning to invest in machinery for which it has to make a choice between two identical machines in terms of capacity X and Y, despite being designed differently. Both machines do the same job. Apple mobile phone and Samsung mobile phone, they do the same job, whatever is required, yes or no?
Yes.
But they have different life, different cost, different revenue structure, different cost structure. Further details regarding both machines are given below. X, Y, cost 15 lakh, 10 lakh. Life 3 year, 2 year. Running cost. What is running cost? Running. This is running cost. Then what is running cost? Operating cost. Operating cost. Operating day to day running of the machine means all your fuel power will cost you 4 lakh and 6 lakh. Now all numbers are different, very difficult to compare directly by looking at the numbers, is it right? So we have to make them comparable by a concept called equivalent annualized cost or benefit. Cost of capital is 9%. Identify the machine which company should buy. Present value factors are given. Now tell me in this question, is there any revenue in this problem?
No, sir. Only cost.
There are only two costs. Cost of machine and running cost. Is there depreciation in this problem?
No, sir.
Do we need to calculate depreciation in this problem?
No, sir.
The answer is no. Because there is no tax, no taxation, no depreciation. Okay, so very easy question actually. I will first compute the present value of cash flows under two options. I will calculate present value of cash flow under the two options. Divide by annuity factor. Select the option which has lowest PV of cash outflow. Because this question does not have any inflow. Is it right? It does not have any inflow or revenue. This question does not have even tax shield also, because there is no tax rate given. On your own, don't assume tax rate. As assuming tax rate is 30%, problem is to be solved like this. Don't make your life miserable. It's already too much miserable. Okay, that you know more than me. Heading, calculation of equivalent annualized cost. Calculation of equivalent annualized cost. Right hand side, two columns. Machine X, machine Y. Are you with me? Those who are with me, they will get rank. First point number A, cost of machine in year 0. So this does not require discounting, or does it require discounting? Year 0 cash flow, do they require discounting? Say yes or no. No, 15 lakh. So this I will write directly without writing any PV factor. Then point number B, write down the running cost per annum per year. 4 lakh, 6 lakh, point C, life in years 3, 2, point D, PV annuity factor PV annuity factor at 9%. Wait a minute. In your study material, they have given you the factor.
Yes, sir.
So you add these three, this will give you PV factor for 3 years. And you add the first and second, which will give you PV factor for 2 years. Come on, please reply fast.
2.531.
2.531. First and second only. Add first and second only.
Sir, 1.759.
1.759. So point number E would be PV of running cost. Running cost will be incurred for 3 years in case of machine X. So multiply B into D. That will give you present value of running cost of 3 years.
B into
BD.
10 lakh 12,400.
10 lakh 12,400.
Wonderful.
6 lakh into 1.759.
1.759. Sir, 10 lakh 55,400.
1055,400. Point F, write down. PV of cash outflows. In this problem, A is also outflow, E is also outflow. Is it right? A plus E. Come on.
20 lakh 55,400.
25 lakh 12,400. This is 10 plus 10, 20, 55, 400. Right now, you will be tempted to say machine Y is better because outflow is lower. But if you invest in machine Y, you incur this amount for a 2-year period only. You can use the asset for only 2 years in that amount. But if you buy machine X, you will incur this cost, but you can use it for 3 years. But I can't directly divide by 3 and divide by 2. Why? Time value of money is ignored. If I divide by 3 and divide by 2, so time value of money is ignored. So I have to divide by 3rd year annuity factor and 2-year annuity factor. Annuity factor is already printed in the answer. Yes or no? So I will not write annuity factor again. I'll divide F by D. So point number next, write down. Equivalent annualized cost. PV of cash outflow divide by PV annuity factor. Do it nicely on your calculator. 25,12,400 divided by 2.531.
Sir, 9,92,651.
992,651. Amazing. Next one.
Sir, 11.
Take on your calculator this number. Divide by 1.759. 11 lakh 68,505. Okay. Now you can compare them in a better manner. Again, understand, if you buy machine X, it is equivalent to spending 992,651 every year. That means it will cost you 992,651 every year per annum. Okay. So all cash flows converted into one single number for comparison purpose. That investment in X will cost you 992,651 per annum. But if you buy machine Y, it is equivalent to incurring 11,68,505 per annum. So which is a better option or cheaper option? X, because our objective is to reduce our cost here. Okay, so write down advice. Advice, right?
This is outflow.
Cost. That is why I have written cost. EAC. C stands for cost. This is costing you this amount per annum. This is costing you this amount every year. Is it right? That means this one number can be used for comparison directly. So please write advice. Company should buy machine X. Company should buy machine X because equivalent annualized cost is lower. Because equivalent annualized cost is lower. Equivalent annualized cost is lower. Question was from your study material. Likely question in the exam. In the past, they had asked this question some years back. Okay. In the exam, they have asked this question. So we have taken one problem on equivalent annualized cost. Now we'll take one question on replacement. Question number 48. Huh.
From morning I'm getting doubt.
There is no doubt. This is very simple.
No, I know it is written in the theory and that.
No, there is no theory. You have suppose consider this cash flow. So you are getting 25,12,400 for using the asset for 3 years. Okay. Now, if instead of everything, just forget everything. Suppose you incur 992,651. I said you take my machine, just give me 992,651 every year, nothing else. So what is the present value for 3-year period? You will multiply by 3-year factor, which is equal to 2.531, and that will give me the same answer, 25,12,400. Yes or no? So by buying a machine yourself, incurring running cost for 3 years gives you so much PV of cash outflow. Instead of that, you can incur this amount every year. This also gives you same PV. So this one number has converted all other numbers into a single number. Is it right? So can I say incurring? Can I say, okay, you have to understand, can I say incurring 15 lakh in year 0 and 4 lakh for 3 year is equivalent to, come on, fill in the blanks, is equivalent to 9,92,651 every year. Incurring 10 lakh in year 0 and 6 lakh for year 1 and 2 is equivalent to incurring 11,68,505 per annum. Okay.
Got it.
So that is the meaning of equivalent. It's like average, but we are just not dividing by 3 and 2.
We are dividing by
Annuity factor of 3 and 2 years. So that time value of money is also taken into account. Is it right? Okay. So just write one assumption in this question. Please write one assumption which is actually not required, but because the students are interested, we will write assumption. It is assumed that which interpretation already explained.
No, sir, please.
You can
In statement.
no. It is assumed that the machines can be repeated. Machine can be repeated more than once. Machine can be repeated more than once. So after every 3 years, you can repeat it. Is it right? Again, you incur the same cost. And second assumption is the cost and running cost will remain constant. Cost and running cost will remain constant. Means after 3 years, if you want to buy this machine again, it will cost you the same 15 lakh, and the running cost will continue to remain 4 lakh per annum. Okay.
So that
See, I have tried my best to explain. You have to keep your ear, eyes, mind open.
yes, sir. Open, but interpretation little.
So write down interpretation. For one machine I will give you Interpretation of EAC. Interpretation of EAC. Incurring rupees 15 lakh in year 0. Rupees 15 lakh in year 0. And rupees 4 lakh per annum. And rupees 4 lakh per annum for 3 years. And rupees 4 lakh per annum for 3 years is equivalent to incurring a cost of rupees 992,651 per annum for 3 years. Is it right?
Yes,
In this question, there are only two cash flows. There could have been tax shield on depreciation also. There could have been some revenue also. So this one number substitute all numbers of that machine so that you can compare these two numbers. Okay, so now we'll take a question number 48. Question on replacement 48. So this will cover a lot of variety of questions. Okay. 48. Tick mark question number 48. Variety. Only when you solve a large variety of questions, you will get that confidence. Question is little lengthy, so we'll do it fast. You will help me with the calculations. Okay. Problem on replacement. Very good question. An existing company, this was in July 21 exam, 10 marks. Oh my God. July 21 exam, 10 marks. Many students will leave by looking at the size of the question, but actually it is not very difficult. An existing company has a machine which has been in operation for 2 years. Okay, so what is the number of years already completed? 2 years. So how many years are remaining? 4. Its estimated remaining life is 4 years and 0 residual value. So now we have only 4 years remaining. So 4 years will be relevant. Understood? Its current market value is 3 lakh. So if I sell it today in the market, I'll get 3 lakh. So 3 lakh is the replacement value or realizable value today. So that is my opportunity value of this old machine. That is my opportunity value. 3 lakh is relevant. The management is considering a proposal to purchase an improved model of a machine that gives increased output. So that is usually the purpose of replacement, to increase output. The details are, the old machine was purchased 2 years ago for 6 lakh. The new machine will cost you 6 lakh. The life is 6 years, life is 4. But remember, out of 6 years, 2 years are completed. So 4 years. This is also 4 years. When the remaining life and life are equal, we will compute incremental NPV. We will not use EAC or EAB. If this was given anything more than 4 or 5, more than 4 years or less than 4 years, then EAC, EAB method will be used. Okay. Residual value for both are 0. So that is good for us. Now next is annual operating days, 300 days, operating hours 6, which means total number of hours in a year 1800. It looks like a costing question. Selling price 10 rupees, material cost 2 rupees, operation output per hour in units. So 1800 hours in a year, 1800 years, 300 into 6. Multiplied by output will give you annual quantity. They should have given directly only. They are wasting human time and talent in this. Some people will make mistake in that also. We students find mistakes where they don't exist also. Okay. We have such a good quality, such a talent. Even where institute can't imagine, we can make mistake there. Labor cost per hour, number of hours into labor cost per hour will give you total labor cost. Such a simple question. Fixed overhead per annum excluding depreciation. Excluding depreciation means cash fixed cost. Working capital 1 lakh, 2 lakh. Income tax rate same 30%. Assume cost of capital is 10%, that is discount rate. Company uses, this I don't like, they make our task little lengthy. WDV method, which means every year you have to compute depreciation.
Discounting rate plus.
And it has several machines in 20% blocks. So we'll apply block of asset concept. When you are following incremental approach, I will repeat,
Block.
you have to follow incremental block value and depreciation will be provided on the increase in the block of asset value. Sale of old asset reduces the block, purchase of new asset increases the block. So the impact on the block is the difference between the purchase price and the sale price. Purchase price of new, sale price of old. Advise the management on the replacement as per NPV method. So when they specify the method, you have to follow that. So first what I'll do, step 1, calculation of increase in block of asset. Calculation of increase in step 1. This question institute answer is very big, but we will simplify it for you. They have written so many unnecessary working notes, not really required. Calculation of increase in, more practice is required. Block of assets for depreciation calculation. Depreciation will be calculated using block of asset method because it's written here also. Company has several machines in 20% block. So they are giving you a hint. You are a student of tax also, I assume. Income tax loss is that when you buy an asset, it will increase the block of asset. When you sell, it will decrease the block of asset. And you will get depreciation on the differential amount. Is it right? So suppose it is earlier X. You buy an asset for how much? New asset will cost you how much? 10 lakh plus 10 lakh. And you sell the old asset for 3 lakh. That is the current value. So your block of asset will become X plus 7 lakh. Am I right? Earlier it was X, now it is X plus 7. So by what amount the block value has gone up? 7 lakh. So we will get additional depreciation on 7 lakh. We'll get additional incremental depreciation. Our decision will help us to get additional depreciation on 7 lakh rupees. Okay, our decision to replace will give us more depreciation by 7 lakh rupees. So write down purchase price of new asset 10 lakh, which I have explained you with the help of algebra also here.
Yes, sir.
Whichever way you understand, less sale value of old asset 3 lakh, increase in block of asset value.
Increase.
Block of assets are block of asset which are subject to same rate of depreciation,
Same rate of
which is equal to 7 lakh.
A minus B.
Any query? 7 lakh rupees. Any query? So first step, what you do, find out the additional block, incremental block. Step number 2, find out incremental PBDT.
Yes, yes, yes.
Incremental
PBDT.
PBDT. And then we will compute NPV. Okay. Step number 2, calculation of incremental PBDT. Little fast. Incremental PBDT. So here you write first column. PBDT means right now I will not consider depreciation and tax in this working note. Existing, new and incremental. Existing, new and incremental. Because other figures are not changing, only depreciation is changing. Because of that, you will have to make two separate working. So first A, write down annual output. What will be annual output under existing machine? You have 300 days into hours, 6 hours, 300 into 6 and output per day. So annual output will be 300 into 6 is how much? 1800 into output per hour in units into 20. So you write here 300 into 6 into 20, 36,000. Here you write down 300 into 6 into output is 40 here. This is doubly efficient machine. So are you getting 72,000? Say yes. Yes. So you will get 36,000 units extra in the new machine. Point number B, write down sales revenue. Sales revenue is output into, what is the selling price? Rupees 10 per unit. Output into 10 rupees per unit. Output into rupees 10 per unit. So that will give you 3,60,000. Sale revenue will be quantity multiplied by selling price. Selling price is 10 rupees for both. Is it right?
Yes,
7,20,000. So incremental revenue you will generate 3,60,000. Point number C, material cost will be output into, what is the material cost per unit? 2 rupees. In the question, please keep question in front of you.
material cost was
2 rupees. So 36,000 into 2. 72,000 into 2. 1,44,000. Additional cost will be 72. One more thing, write down labor cost. Labor cost is based on hours. Labor cost is based on hours. What is the labor cost per hour? 20 and 30. So here we will have 300 into 6 into 20. 300 into 6 into 20, 36,000. Here we'll have 300 into 6 into 30. 306 into 300 into 6 into 30 rupee per hour. Hour 54,000. You are right. So what is the incremental labor cost? 18,000. One more, right? Fixed overhead in bracket cash, not excluding depreciation. Excluding depreciation. So what is the fixed overhead given in the problem for machine, existing machine? 1 lakh. Is it 1 lakh? And how much is there? 60,000. So you will save 40,000 here. You will save 40,000 here. Any query? Point number F, write down PBDT. PBDT will be B minus C minus D minus E.
over here. 152,000.
है जी
152,000.
1,52,000. Okay, next.
462,000.
4,62,000. Now here it is minus will become plus. Okay, ध्यान, keep in mind. 3,60,000 minus and this will become plus because it is already minus. Anybody for the last column? Yes, this must be right because I have to use this figure. You can cross check. The difference of these two columns will be equal to this. Okay, so suppose you don't have time in the exam, then you can ignore this entire column and only below you can write incremental cash flow. Suppose you don't have time in the exam, because that is also right. Is it right? But if you have time, then follow the institute's presentation, because many of them follow the presentation of the institute for marking purpose, even though your answer may be right. Now the next big calculation is CFAT and present value. So next you write down step 3, NPV. Next write down NPV, year, PBDT, exam question for 10 marks. Don't take it lightly. After that we'll calculate depreciation at the rate 20%. We will get PBT. We'll calculate tax at the rate 30%. We will get CFAT. We are given PV factor in the problem at 10%, and therefore we'll get present value. Now understand carefully. How many years? 4 years. Keep one line blank after each year and write year 1, 2, 3, 4, 5. Have you written? Now PBDT, write down 3,10,000 4 times. Column number you want to write? Okay, homework. Already you know this. Don't worry.
3, 4, 5.
Okay, I will write column number also on public demand. Column number 1, 2, 3, 4 will be 2 minus 3. 5. 6 will be
2 minus 5.
2 minus 5. 7. 8 will be 6 into 7. Right. So depreciation, we have prepared one working note. Increase in block of asset for depreciation. Do you remember? How much was that? Working note 1. 7 lakh into 20%. 7 lakh into 20%. 7 lakh into 20%.
1,40,000.
Yes. Now I will tell you a small trick. Multiply
By 0.8.
First you take 0.8 into 1,40,000. 0.8 into 1,40,000. Just press equal to now. See the magic.
9,600.
Again press equal to and see the magic.
680.
So you got the depreciation like this. Okay. PBT, column 2 minus column 3. Kindly reply.
140 minus 3. 170.
1,70,000. Yes. Next,
Sir, 198,000.
1,98,000. Next,
Sir, 2,20,400.
220,400. Next,
Sir, 2,32,320.
238,320.
180.
Yes, 671,680.
Sir, 238,320.
238,320. Now I will tell you one more trick. Type 0.3 into 1,70,000. 0.3 into 1,70,000.
51,000.
Yes, now you just type the number and press equal to.
59,400.
You'll get the answer 59,400.
66,
Type the number, press equal to 66.
120.
Very good.
71,496.
71,496. Any query?
Sir, 259.
Column 2 minus 5 will give you CF80. Yes, come on.
Sir, 2,59.
Student is saying 2,59,000. You are right.
2,50,600.
250,600.
243,880.
243,880.
Sir, 238,504.
238,504. Factor you copy from the book. When the factors are given by the institute,
Respect the institute.
then respect. Okay. Otherwise, they will disrespect. Their disrespect will cost you a lot. And now what you will do, you will use the memory plus function when you multiply these two columns. Use memory plus function, round off the last digit. Round off the last digit.
235,431.
235,431. Come on, the next one. Yes, come on.
206,996.
206,996. Very good. Come on, next one. You can do it. Yes, yes, come on.
Sir, it is 183,154.
183,154. Amazing.
183,154. Abhi 238.
162, how much?
163. Sir, 162,898.
Okay. If you are using memory plus memory recall,
Sir, it is
this will give you PV of CF80. Haji?
788,479.
788,479.
79. Yes, sir.
788,479 is right. This is the PV of cash flow of the 4 years. But we have to also adjust the initial investment and the terminal values. Is it right? Any query on this till now? No. Write down below. Draw this line. Draw this line. And below this line, right hand side,
Rupees.
write rupees. So I'll just write it here because I need little more space. So we have to write first PV of CF80, which you have just now computed 788. 788,479.
Yes, sir.
This is my in between year CF80. Okay. Then you write down purchase of new asset in year 0. No, 10 lakh. Or write down, don't worry, I'll write that also. This will be outflow. Year point C, sale of old asset. Yes or no? In year 0. Or what you can do, you can combine them and write 7 lakh. That is also okay. You can write 7 lakh, you can write 10 lakh separately, 3 lakh separately. Point number D, write down incremental working capital in year 0. Incremental working capital in, how much incremental working capital you will incur? New will be 2 lakh, old is 1 lakh.
1 lakh.
So you have to put 1 lakh more.
2 lakh minus 1 lakh.
So in bracket write down, it is an additional working capital investment, but this 1 lakh will be recovered in the last year. Don't forget that. Recovery of incremental working capital, sometimes students forget this, okay? In the fourth year, in the fourth year, in the fourth year. So because it is fourth year,
So for effective,
I will have to multiply by fourth year PV factor 0.683. So which will give you 68,300. Do we have any incremental salvage value in this problem? Do we have incremental salvage value in this problem?
like
Both have zero salvage value.
uh-huh.
Oh my god, since both have zero salvage value, we will ignore incremental salvage value. 0 minus 0 is 0. So can you please take the total of the last column, that is NPV? Carefully, without mistake. Positive or negative?
Negative 243,221.
Just do it carefully one more time.
256,779.
Just do it properly. I can't expect a student of intermediate making mistake in just adding 5 simple numbers.
Sir, 56779.
56779 after 3 attempts. Okay.
No sir. Second.
Acha, second.
First second.
Positive or negative?
So positive.
So what is the advice?
Sir, you should go.
Right, company should replace. It's a problem of replacement. So your answer will be company should replace.
Since NPV is positive.
Company should, write slowly, nicely. Company should replace the old asset. Company should replace the old asset
Old asset.
by the new one,
By new world.
because incremental NPV is positive. Because incremental NPV is positive.
Yes. Positive.
Because incremental NPV is positive. Write one note. Note. It is assumed that sale of asset will not affect capital gain tax. It is assumed sale of asset will not affect capital gain tax. Okay, so now this answer is over.